What is good, everybody? I didn't record on day 12, but I did backtest, and we're just going to go over the trades that I took. So overall, I analyzed, let 5, 6, 7, 8, 9, 10. 10 trades from April to July of 2024 for Bitcoin. We're going to start right here. All right. Okay. So I was on a win streak. It was looking pretty good. 4 for 1 is pretty good. And let's see, okay. This, we see the original consolidation, these areas right here. Or you argue this is accumulation 1, accumulation 2, smart money reversal. And that's exactly what we got. Now, so in this case, there are two trade ideas, right? Trade idea 1, we had a potential mitigation of these PD rays. However, remember, the rule is we do not enter a trade until we trade through the breaker. In this case, this is the breaker right here. So we didn't trade through it until here. So everything above here, I marked it out, but I avoided it. I didn't enter. And even if I did enter, this area right here, it was a fair value gap respect, overlapping with an inverse fair value gap. You could enter here, but then you would have stopped out. So let me just focus on the high quality trades. And okay, let's go over the winning trade. So after I waited for the break, right, closing through it, and then I waited for the respect. Would it go tap into here and go back down, or would it just disrespect it? In this case, we tapped back down, we respected it really well. And during that time, we only had a respect of a breaker, right? This fair value gap right here, if you draw it across, it didn't respect it because we closed above. So I waited, okay, let's see if we respect this fair value gap right here, as well as let's see if we respect this redelivered rebalanced price range. In this case, we had exactly that, right? This wick right here tapped into the breaker, tapped into the fair value gap, tapped into the RDRB, stop loss a little bit above here. You can put it like, I mean, sometimes crypto is very volatile. I should have put it above this 50% of the breaker. And then entry off the 50% fib right here, because I couldn't find a fair value gap, enter off of there, and we hit a take profit. It went a little bit lower, so it kind of depends what happened. But all right, let's go over trade 2. Trade 2, what happened trade 2? We got another success. Okay, let's see what happened. Okay, we got the original consolidation, clear distribution, distribution 1, and smart money reversal right here. Or you argue this is distribution 1, distribution 2. It really depends on market experience. And okay, what did we get here? We got a beautiful, clean price action trade. Wait, let me see something. Okay, yeah, that's fine. We got a beautiful, clean price action trade. Unicorn right here, 5-minute FVG, breaker. Look good, right? Now, you have to wait for price to respect it up, right? Usually I wait for a short-term change of character, right? So we got that, and that's when I entered. Stop loss. I put it the bottom of the FVG, which was below 50% of the breaker. So, a little safety net, we're pretty good. And then boom, price hit. Yeah. I believe price cleared all the way up here. Let me see. Price eventually struck all the way to the original consolidation and above our 1 hour fair value gap. Okay, price cleared up here. I think if you had the balls to hold it, it would have been a 1 to 20, but come on, realistically, maybe you leave a runner. But we took that dub. All these are pretty clean price action. We took another dub. 3 back-to-back dubs. And let's see what happened here. Okay, original consolidation, distribution 1. You argue this is distribution 2. or this is distribution 2, distribution 3. Mind you, I'm not targeting the entire thing, right? I'm not targeting the entire thing. Just targeting this right here, this liquidity, low resistance liquidity run all the way up here. Ding, 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 ding. You could argue up to here, but well, I mean, we have this expansion here. Depends on your risk tolerance. I took a 1 and 2. Let's go dive deeper, zoom in. Okay, what did we have? Order block here, breaker right here. Yep. Wait until you trade through the breaker, and I waited for the respect. Now you could argue this is a respect of the breaker. However, there was a fair value gap that I wanted to see. Oh no, it was this one. Wait. Oh, okay, yeah, that's right. Respect to the breaker here. But I wouldn't put it here because we had this RD/RB right here. So this was the potential breakaway gap, which did exactly that. Look at that. Respected the RD/RB. I put my stop loss below the breaker over this unicorn model right here, which, yeah, that's fine. You could argue that you could wait for this because this is technically a unicorn as well, right? Tapped a little bit into this fair value gap, tapped a little bit into this breaker right here. You could put entry right there and ride it up. All right, stop loss would have been below here. Entry would have been a little bit higher, whatever, and you would not have gone stopped out or even break entry. So I'm noticing the unicorn model has higher win rate compared to no unicorn model. I mean, it makes sense. Makes sense. So we took that dub. Here's my notes right here. You guys want to see it? Another one. We avoided this one. Why did we avoid this one? Oh, we disrespected the breaker. This is the breaker. This green candle. I mean, on my screen it's gray, but that's the bullish candle right here. We disrespected it with this, so I wasn't interested. And eventually, price hit stop loss. It would have went down here. Okay. Next trade. We missed this trade. Why did we miss this trade? Oh, I was waiting for price to form a unicorn, right? This is the breaker. This is the mitigation. Or is it part? No, I don't think it's part of the breaker. No. So we got one right here, right? The respect of fair gap, respect of the breaker. However, I believe I had price set to like, I wanted this to retrace deeper. But price respected that RDRB. So it was kind of like I didn't have a solid risk to reward ratio because I preferred the unicorn stop loss here, but the entry would have been all the way up here. And I was like, I don't know, like it just wasn't. I mean, it hit well above, but I just like the unicorn better. So to be honest, I was kind of waiting for this to break through, a possible retap into this FVG, like aligning with this breaker, aligning with this mitigation, and then tap up, use that as a stop loss, but didn't happen. Let's see. Oh, we avoid another trade. Okay, look, no breaker, no trade. Right here's the breaker. Traded through it right here. Disrespected it right here, but we tapped into it FVG. However, breaker takes higher authority. We don't take the trade. This case it saved us. Right, stop loss right here. All right, what is this one? Missed. Why did we miss this trade? Look, here's another one. We disrespected the breaker, but we got a success. So there's cases where disrespect of the breaker leads to success, and disrespect of the breaker leads to stop loss. In my case, I rather take the higher quality trades than take that risk. So stop loss here. I mean, no entry here. Boom. Okay. Okay. What happened here? We missed the trade. Why did we miss the trade? No breaker about retracement. Oh. Was waiting for a potential unicorn. However, this RDRB showed here, and it was never respected, right? It formed, but it wasn't respected, so I didn't enter. Right, look, breaker right here. Didn't even tap into it. We tapped into the mitigation, but this right here, we disrespected the FVG. If this was respected, I probably would have entered stop loss above this one right here. Entry would have been below here, and we could have got this move here, clearing all this low resistance liquidity up to here. But we didn't. We unfortunately did not get it, which is fine. That's fine. How long is this day? July 16th. Okay. How long? Day after? What did we miss this? Oh, we got a success. What happened here? Okay. Original consolidation. I mean, you could argue this is consolidation because the way I'm framing it now is the low that broke the high. And if I zoom in on it, if it looks like it consolidated, then that's an area of interest. So you can say, original consolidation here, accumulation 1, accumulation 2, smart money reversal, and then etc. So what happened here? Okay, we didn't trade through the breaker, so I never entered, right? And so we did it across this, and let's see. Okay, we had this fair value gap. That means I would have looked for an RDRB. In this trade, we didn't have an RDRB form. However, we did have this unicorn right here. Stop loss above here. You notice how, look, notice how we would have swept it. So I put it a tad bit higher above on the higher echelon of the breaker. Now, I don't have a mechanical way of identifying this, probably maybe this. But then again, this isn't a swing high point. So this one was kind of like, okay, as long as it's a little bit above the breaker, which I should figure out how to mechanically do that. Because my idea was, okay, if we disrespect the breaker, I'm not going to look to enter the trade. All right, the breaker is the number one PD array that I'm looking for. So we didn't get that. But still decided to enter off of here, this fair value gap right here. As you can see, this one. And we hit this 5-minute FEG. Boom, cleared it. And it went down. RDRB does not automatically veto our trade. Especially if you have a unicorn model. It doesn't. RDRB just shows that is the market urgent? Does it have a sense of urgency? Doesn't mean like, okay, we can retrace deeper, which in this case is exactly what we did. Now, depending if you put your stop loss here, you would have stopped out. But still take that as a dub. Yeah. Next trade. So on average, these trades are maybe like spaced apart between a couple days to a week, which is pretty good. That's my type of trading. The entry and the take profit is much faster. It's just sort of the trade idea. All right, why do we feel this one? Let's see. Okay, trade through the breaker. Respect the fair value gap right here. Stop loss here. Could have put it above these highs right here. Was looking for an RDRB. We didn't have an RDRB. But it was a unicorn, yep. Unfortunately, didn't hit take profit before stop loss. I mean, we were in profit here. We just didn't hit this, and I don't set my trades to break even. So, it is what it is. Honestly, that looks like shit consolidation. Huh. All right, next trade. We missed this trade. Why did we miss this trade? Okay, the breaker wasn't tapped. Mitigation wasn't tapped. So I was saying that this was the possible inducement. All right, you got this low here, sweep here before going up. That's my idea. We didn't get it. That's cool. That's cool. It's fine. Next trade, next trade. We hit a dub off of this one. Okay, let's see what happened. Okay. Oh yeah, I noticed all of this was low resistance liquidity. Like all of this was crazy to see. Now, of course, I could have put it all the way down there, which we would have cleared. I think it was a 1 to 10, but I decided, 3.57, that's good enough. Cool with that. Plus, we sweep all of these. Not bad. So, in here, you could sort of frame it as the low that broke the high. What is the low that broke the high? One could argue, okay, this is the initial low. But to me, it's like, okay, it's either one of these. This looks like original consolidation. Original consolidation here. Distribution. Accumulation 1. Accumulation 2. Accumulation 3. Smart money reversal. Low risk sell. And then boom, target that original consolidation. That's why I had it right here. Took it. Let's go over the trade. Zoomed in. Okay, so zoomed in. Let's see, we got this 5-minute FEG. Inverse figure I respected. Which overlaps with the breaker. Yep. Because we traded through the breaker right here. Respected it with this. Right. Had a short-term change of character. Correct. FEG respected here. Now, okay, now you could argue to put the stop loss here, right? This is the unicorn. This is literally unicorn, FEG and breaker. However, because I'm trading crypto, I thought, okay, you know what? This here would be a better stop loss because it's above the breaker. I would be surprised if we wick up above here again and then go down. But we take the odds there. If you put it right here, you would got stop loss out a little. I mean, kind of depends how higher you put it. If you put it on the upper echelon of the breaker, it would have been fine. Top of the breaker would have been fine, but right at the stop loss, it would have been good. And then, okay, I entered off of the top of this FAG because that was the 50%. If we frame it from this low to this high, we draw the fib from here to here. 50% is right here. So I put it right there. Could have went higher, but I mean, I'm not complaining. Yep. There's no RD or B. Sucks. All right. And that's it for day 12. And day 13, I'm literally going to do right now, but I might not record it. I might just do the same thing I just did right now. Because I'm not going to lie, my storage is kind of running out on my computer. Like, all those videos are like 100 gigabytes. It's crazy. So, all right. See you guys next time.